let's go ahead and get into the market crash. Okay, so this is coming from CoinDesk. Bitcoin drops to 6-month low. Ether eyes bearish cross as U.S. stock index futures erase early gains. Bitcoin and Ether fell to their lowest level since July after Goldman Sachs predicted a faster pace of Fed tightening. Bitcoin, Ether, and the broader crypto market faced another wave of selling during Monday's European hours as U.S. stock index futures erased early gains, signaling an extension of last week's risk declines. Bitcoin fell to 33,600, the lowest level since July 24th, even as technical indicators signaled oversold conditions. The leading cryptocurrency has declined 27% this month and is struggling to find a price floor, with whales or large investors staying on the sidelines. Ether, the second largest cryptocurrency, the second largest cryptocurrency, slid 10% to 2,270, the lowest since July 28th, according to CoinDesk data. The native token of Ethereum's blockchain has lost 38% this month. Ether could soon see a Bitcoin-like death cross, a bearish cross of 50 and a 200-day moving averages. Bitcoin has dropped over 10,000 since confirmation of the negative crossover earlier this month. Other prominent coins like Solana, Cardano, and Polkadot have fell 12 to 15%. The latest round of sell-offs come after Goldman Sachs predicted a faster pace of Fed tightening if inflation continues to rise. The heightened geopolitical tensions between U.S. and Russia could be adding to bearish pressures around risk assets in general. Quote, we see a risk that the Federal Open Market Committee will want to take some tightening action at every meeting until the inflation picture changes, Goldman economist Dave Marisol noted in Saturday's client note, according to CNBC. The investment bank has penciled in 4/4 percentage point rate hikes for this year. Fed fund futures are priced for nearly 5 rate increases. Most commentators have tipped the first increase in borrowing rates in March, followed by 3 more at subsequent quarterly meetings. The ultra-hawkish expectations perhaps leave the door open for a relief rally if the central bank disappoints market expectations later this week by sticking to its December projection of 3 rate hikes in 2022. The Fed's January policy meeting is due to start on Tuesday, and the statement interest rate projections will be published on Wednesday. So if we're going to see a recovery, just like in general in the crypto market, I think it's going to happen, obviously, like sometime between like this Wednesday and Friday. Somewhere in between there is when we'll see how this is going to play out. Traditionally, if we're looking at a super cycle, most of the time I would have expected the bear market to hit in February, probably like a peak in February, and then we would basically have a decline through March, and then we would go into the bear market until the next Bitcoin halving. What we are seeing now is possibly something starting sooner. You can't ever predict exact times and dates or anything along those lines. We can get an overall picture, though, if we look at the past. So that's kind of what I'm doing. If we look at the past and you guys want the worst case scenario as I see it, I'm going to give it to you. And then we'll get all the comments of FUD and blah, blah, blah. But I think it's important that as one of the few cryptocurrency YouTubers that seems to really care about making sure we're as transparent and honest as possible, I'm going to tell you guys what I feel, what I see, and then how I think this is going to play out. And I could be wrong. I've been wrong a lot in my life. The good news is that I usually try again. So let's go ahead and just think about this in general. And I'm going to take a sip from Gamer Sups. Make sure you guys go get your Bitcoin shaker. Hey, oop, turned it the wrong way. The lid's not right. Here we go. All right. So if we look at previous cycles, what happens in a bear market is essentially, like I said, one of the big things already is most of the altcoins go away. Most of them just disappear into thin air. So be very, very careful with keeping anything in any sort of altcoins unless you are very, very strongly a part of the community, being in the discords, communicating with the developers, making sure that development's actually being done, all of this sort of thing. We're going to see in the next cycle, just like we saw this cycle, a whole bunch of coins that have roadmaps that have had nothing done on them since 2018. That's just the way it goes, okay? And that's how it'll happen again in this case. So first of all, what I would do, or what I am doing, is pulling everything out of all of the altcoins that I don't see a future in or am not strongly tied to. Some that I'm staying tied to just because I think that they have a future and I want to stay in and see what the development teams are going to be doing, is like Flux. Part of that also is because I'm actually deploying apps on Flux, so I need some Flux to pay for the apps that I'm deploying on Flux. Not so much necessarily an investment strategy, purely just, which is good news, having fun utilizing something. There's also Ergo, but that's very shaky ground right now, especially with the EIP 27 kind of up in the air. GetBlock has deployed their voting mechanism, allowing individual miners to go ahead and vote. Obviously, that parallel to Bitcoin from Ergo, which Ergo has kind of copied, where the miners are making the votes and the decisions for the changes of the network, is very positive. So that one I'm going to keep an eye on, that sort of thing, right? Am I going to keep a ton of holdings in there? No, most of my holdings are going to be in, well, Bitcoin at this point, because do I trust Ethereum to continue on? Well, if we're going to hit a bear market and then Ethereum's going to make the biggest consensus mechanism change in all of cryptocurrency history in June, I ain't willing to put all my chips in that boat. I'm just saying, I'm not willing to do it, okay? The timing couldn't be worse, and I just don't think that it's going to be a good idea to leverage heavily into Ethereum. Now, I understand people are going to argue with me and say, like, obviously, the price is going to pump due to a successful move to proof of stake. That's possible. But the price could also dump due to an unsuccessful move to proof of stake, okay? It's just as likely, okay? And I would rather be stuck in something like Bitcoin that has just better security, better fundamentals, than be stuck in something that's shifting very drastically during a potential bear market. And that's how I feel about it. So we're going to do something that we don't normally do. We've done it a couple times to just like give the overall view of how halvings work, etc. And we're going to do it again. I'll give you guys my Bitcoin and Ethereum price predictions right now, okay? This is not financial advice. I could be incorrect, but if we're basing it off of purely previous cycles, we're not basing this off of things that are happening right now, because obviously there are other external factors that need to be taken into account, some of which would be larger institutional investing. We got Intel investing into Bitcoin ASICs and building foundries stateside. A little note about that. If you notice when they are going to complete their manufacturing in Ohio and potentially release their ASIC miners, it lines up very conveniently with the next super cycle. And we'll explain that too. What are we looking at in the next couple months? More than likely, at least from my perspective, we are looking at going down further through March. In March, I would assume some sort of bottom floor. What is the bottom floor that I would see here? Well, if I look at just looking at previous super cycles, typically what you see is the bottom being the last super cycle's all-time highs. So what was the last super cycle's all-time highs? Well, for Bitcoin, it was 21,000. And for Ethereum, I want to say it was 1,100. I believe it was 1,100. So where do we end up in March? I think we end up with Bitcoin being around 21,000 and Ethereum being at 1,100, and then everything settling out until the next Bitcoin halving. When's the next Bitcoin halving, you may ask? Well, I do have that pulled up here for you. We do have a countdown for that. And it's going to be 866 days, 1 hour, 33 minutes, and 47 seconds. So if we follow previous cycles, etc., we can expect the crypto market to remain, after the dump is complete, right? Whatever we hit there, we can expect cryptocurrency to remain pretty dormant until a couple years from now, right? 866 days. External factors. Once again, we were already talking about these inflation rates going up by a whole percentage point over 2022. We are also talking about GPU shortages. Still, silicon shortages are still going to be a thing. And we're going to talk about that too, because we are seeing some price alleviation within the GPU market. We have large institutional investors. However, like I said, in the case of Intel, really they're timed to launch, from what it looks like, their factory as well as the ASIC releases are looking to be timed perfectly with the next bull run. That's what it's looking like. If you enjoyed this content, be sure to hit the subscribe button for more, or check out this playlist for more crypto content related topics.